The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. And when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the United States with areas of life insurance, long-term care, disability, life settlements, and fixed annuities. And that's our area of expertise. And we're here every Friday at 3, and we like to work with lots of great professionals. And today we have a special guest with us, and his name is Kelly Koukou. And Kelly, why don't you say hello?
How you doing?
Kelly, give us a little bit about your background. I know you're with Lee & Associates, and your title, and tell us what you're all about.
Okay, I'm a principal in a company called Lee & Associates. We have 80 offices around the country. I am based in the New York City office. It's at the News Corp building in Manhattan. I've been with Lee for the past almost 14 years. I was a CB Richard Ellis before that for about 15 years, and I had another company that was working with commercial real estate when I first started in this business.
How did you get into commercial real estate? I mean,
I used to be in the cellular phone business, and I had that business for about 10 years, and I ended up selling my company to a company, MCI, and then MCI then morphed into something else. And then what I liked to do was commercial real estate, so I sort of transitioned to there after that.
Oh, cool. A lot of our show, we talk about what's going on in Long Island, and I like to bring Wall Street to Main Street, so I'm really glad that you're here, because most people on Long Island, out east, we have people that are electricians, farmers, all kinds of walks of life. But they don't get some of the high-end building development stuff. But you really have a good bird's eye view of the economy. And I really want to get your perspective of what's working, where's the real estate market going commercially? Are we going to, we see retail stores closing, we see development. What's hot right now? What's cold? What's going on in the commercial real estate market?
So if you look at what's happened since COVID, because that basically rewrote the playbook. So for a while, retail was out, industrial was up, because industrial was basically supplying the Amazons of the world, and the Amazons of the world were doing deliveries to the houses and the other stuff. Retail now is back. If you look at the shopping centers outside of the little mom and pops, which has redundancy, where you drive by one and there's a hair salon and a nail salon and a whole bunch of other nonsense, and a pizza store, and they go down 500 feet and there's another hair salon and stuff like that. Outside of those guys, if you look at the major centers, for the most part, they're busy. We're working now with a company that does cold plunges, which is when you go to the gym, you do a workout, you come back and they have a small room set up where you do a sauna, and then when you heat yourself up, you drop into a cold pool and you go back and forth, and apparently it regenerates your body, and that's a new trend. There's actually a couple of them nationwide. I think one of them is called Sweat House, but it's a bigger operation. There's a lot of new stuff now coming on the market. I mean, outside of the restaurants and stuff like that, and in the shopping centers.
And on the east end of Long Island, which we have a lot of listeners on the east end, we're seeing a lot of activity, a lot of land being sold and bought and developed, and and I know some people are concerned about preserving the farmland. Some people are developing the farmland. What are you seeing out east?
So we started probably at around early 2000s with solar. And we had a bunch of the farms that we sort of transitioned over to solar. They were giving out permits, and then the permits stopped, and sort of that took a step back. And then the residential market came up because there isn't enough residential property out east. So a lot of that bigger farmland, the nicer ones on the major thoroughfares, started being developed into residential. I mean, there's still farms out there, but you have to be in a certain size range to make it profitable. When you start dipping down below 15 acres, it's very difficult making a living.
Interesting. And then, a lot of people think about interest rates, and how has that affected the commercial industry? So
now we're kind of have balance, but about a year or two, the interest rates were up. A lot of the commercial real estate deals weren't getting done. The problem with commercial real estate is a lot of it is based on a cap rate. So you'll sell an asset and you've had it for about 10 years, you've put tenants in it, you've marketed it. Now you go to sell it, and a cap rate where Long Island would have been something decent, 6.4, 6.5% for a commercial strip center, and then your financing rates are at 7. So right. You now have to sort of recalibrate what the cost of money is, what somebody's going to pay for your asset, and all of a sudden the numbers don't work. So for about a year and a half ago, going back 2 years, the market was stalled. Now it's back, the interest rates are slightly lower, and things are starting to move again.
There's not as much, I would say, from work at home. You mentioned COVID, and I know a lot of businesses, I know Manhattan, particularly because I know you have offices in Manhattan, and you see a huge difference because people now can work at home. And how has that played into the whole leasing and real estate and corporate real estate? And
so COVID rewrote the book. Before COVID, there wasn't a lot of people working from the house.
Right.
All of a sudden, COVID comes along, they shut down your office building, and you figure, okay, let me do what I got to do at the house. Most people weren't set up to work from the house during COVID. They had a computer, they didn't have a phone system. You try to make phone calls on your cell, and the calls go in and out. So it wasn't done properly. And Manhattan at one time, and the way Manhattan registers how many people show up is they have a turnstile. So you walk into a big building in Manhattan, there's a turnstile, they sort of count how many people go in and out. And at one point, it was about 30% occupancy, I think 2021, right after COVID. Now they're probably up to maybe 65% or 70%, where a lot of people are actually coming to work, because most people don't like to work from the house. Your refrigerator's there, you're running back and forth to the refrigerator, you're putting on 10 pounds, and you don't have collaboration, you're basically by yourself. So if you're trying to do a pitch and I have to do a Zoom call, get 12 guys on there, and then you have to, it's very difficult not being in one place and having a conversation. But it's working. I mean, if you look at attorneys start billing this the second they pick up the phone. You don't have that hour drive where there's no value
Right.
to your time. So for some people, it does work.
Right, but how does it affect the buildings that say that you were doing a lot of office buildings, and new building is not necessarily office buildings because they can't get the lease rents and they can't. So,
okay, so
what's going on? I mean, what's happening with all that real estate?
There's three distinct classes of office buildings. There's an A building, which is typically a larger building. You have to have a restaurant, or you have to have a restaurant and a gym. Then you have a B building where maybe you have a cafeteria and you have less. And then you have a C building, which then the parking is an issue. The building is basically older. The bathrooms haven't been done in 20 years. So typically what's happened is right when COVID hit, a lot of people didn't go back to work. People looked at their footprint and said, look, we're in 10,000 people, 10,000 square feet. Only half our people are showing up. We really can't do much. So typically they would go back to the landlord and look to reduce the size of their footprint. The problem is some of this stuff was built a year or two prior, the landlord had laid out typically $35, $40, $50 a square foot to build the space. So the last thing he wants to do now is, after he's built the space, give you the space back, collect half the rent, and redo the space and make it work.
Right.
So but now we're kind of catching up. A lot of people have started to come back. A lot of things are back.
Well, you're listening to the Main Street Code for Financial Success, and Kelly, if someone wants to get a hold of you, what's the best way to reach you?
My cell phone. Area code 516-835-7833.
And the name of your firm is?
Lee and Associates.
Lee and Associates, and they're a fantastic firm. They do a lot of great stuff. And you're listening to the Main Street Code for Financial Success. If you want to get a hold of me, Neil Himmelstein, 631-647-4694. Thank you, and we'll be right back. Welcome back, everybody. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here with Kelly Koukou from Lee & Associates, a commercial real estate broker who knows the market, understands what's going on, and I'm very happy to have him because he has a great perspective on things that many of us don't see. Now, a lot of our listeners are looking for alternative investments to the stock market. So they may be looking at getting into buying commercial property or leasing or selling their land or something. Tell me some of the positives of getting into real estate. I could mention some. There's some great tax advantages, but why would people want to get into commercial real estate now? Maybe not 3 years ago, but now might be a good time to look at commercial real estate as an alternative to the stock market.
Well, look, the tax advantages are huge. And real estate typically goes up 3 or 4% every year. You can't say that about the stock market because you don't know day to day what happens. I mean, look at what's going on right now with the war in Iran and how that's affecting oil prices and how oil prices are then affecting the NASDAQ. You don't have so much volatility in commercial real estate. But the key to commercial real estate is buying the perfect asset, buying an asset. So what we talked about originally is the last thing you want to do is buy a strip center on Sunrise Highway or 27A where there is redundancy one after the other. You want to get something that doesn't have a lot of replication in the area. You want to buy, or you can buy a triple net asset, buy a CVS or buy something that will be there and it's still paying off. You can treat it like a coupon. Checks get mailed directly to your bank. The banks make the deposit, pays off your mortgage payment. It's a real estate investment for all intents and purposes, but you don't have to spend time massaging it, getting tenants, doing construction. But real estate is work. It's not like you just buy it and you forget about it. You have to be on top of it. You have to know what's going on in the market. You have to follow trends. So it's a little bit more complicated than just buying stock.
Right. But there are situations where you may be selling real estate. Let's say you're selling a property and you may want to get into something else. Maybe it's an investment property, or maybe it's a farm and it's going to turn into an investment property, and you don't want to pay taxes right away. One of the things we talked about in other shows is like charitable trust, but there's another very popular tool called a 1031 exchange. And a 1031 exchange is you can put into something like kind after you sold it. And why you wouldn't want to do that is you would defer any capital gains or growth on that. And it doesn't have to be in real property. It could be like in an investment that invests in real properties, correct?
Correct.
Yeah. Now, I'm not an expert in 1031 exchanges. Kelly gets involved in it, but again, he's not the guy that's going to do the 1031
We're not
exchange.
the attorneys. The attorneys are the key to the entire process.
The attorneys and their financial planners
and the financial
that get very involved in putting in like Delaware statutory trust and other
Exactly.
things. If you're in that situation, call us and we'll put you in touch with the right people, because this is a very interesting phenomenon. There's charitable remainder trust we talked about, again, bringing Wall Street to Main Street, where you can give the property to a charity, basically. You still get the results of the asset and income, and then we replace it down the road with insurance to replicate it. There's also installment. You can do like an installment thing. You showed me another situation too. If the developer is developing a property and you're selling, like you're selling a farm and they're going to develop a property, you can partake in this as an investment so much as they put on more units or something. Can you just explain that whole crazy concept?
So
it's not crazy. It's
not crazy.
Pretty simple.
It's pretty simple. It's basically doing a joint venture with a developer. So for argument's sake, if you have 15 acres, 20 acres, and it's a farm and it's not producing, you'll look around and say, okay, what can I do with it? If it's on a major thoroughfare, if it's close to development, it's a good residential play. We find you a developer that has built or is building houses in that locality. There's basically a rule of thumb that says, for argument's sake, Brookhaven will give you 3 houses per acre. That's a basic rule of thumb. For certain conditions, you can increase that to 4, to 5, sometimes even more, depending on what it is. So if you own that real estate asset and you look around and you see that dirt value, just for dirt, for somebody to buy it and basically farm, is probably now $65,000, $70,000, give or take an acre for dirt. But if you have that dirt, but it's on a major thoroughfare, you now have options. So we put you together with a developer, you put the property into the joint venture operation, they come in, they do the construction, they do the work, they do the permitting, they do the approvals, and then you get paid at the back end when everything is finished. And the back end is substantially more than what it is up front.
Right.
Because once you take the dirt and you build the roads and you put the STP, which is the sewer treatment facility, on the site, typically I think it's more than 8 or 9 units. You need some sort of filtration depending on how many units per acre that you've got. But I mean, we've done one, actually we did one in Nassau County, not to get away from this. But
that's okay.
There was a hotel in Lynbrook, I think it was called the Capri Motor Inn, that had been closed for a number of years with all kinds of problems. We represented the German company that owned it, and I had gone to a developer to see what they can develop. We sort of came up with one, I think it was about 60 units that they could build on that. I think it was like an 1.5 acre site. And we needed to get the numbers up to about 7 million, so the only way we could do it is to increase the yield. So we had to negotiate with the town and certain other elements to get the numerics to work. It did work. I think they built ultimately about 82 or 83 units. Developer is a personal friend of mine, Terwilliger and Bartone. They're one of the best developers in the area. They've built most of Farmingdale, they've built most of Hauppauge's residential. They're a very strong player. And they built it, they're complete, done, and then they sold it to an insurance company 2 or 3 years ago for, I think, 38 million. The land cost was 6.
Wow. So, but the interesting thing is, unlike your everyday broker that's up and down the street, some of the key elements of some of what you do and have to do to maximize is to go to the town, talk to the things, what can we do, what can't we do. There's behind-the-scene negotiations that differentiates what you do from a guy that just holds up a shingle.
Exactly.
And that's important. You need somebody that can maximize your sale or your purchase by dealing with the towns, dealing with the codes, dealing with the... It's a lot goes into it.
With the zoning attorneys who basically spend their entire day in front of those guys.
And sometimes it's a 2-year process or longer. Or it can be shorter, but I'm saying it could take a long time because if you really want to maximize your yield, it's a long time frame. And quite candidly, you getting paid is a long process too, I would bet.
It is.
Which is difficult, you know?
It is.
You know, it's funny because a cycle of money is very important.
Yes.
Turning money, if you're spending a lot of time doing something, you know, sometimes I know in my business and everything, you know, things take time. And if you want to do it right, it takes time, it takes patience, and you got to do the right job for everybody. So I love working with professionals like Kelly. I got to be honest with you. It's a world of difference. and you need to work with professionals and get the job done right. I did have one closing question for you. How do they reach you, Kelly?
My cell is my best way. Area code 516-835-7833.
And you want to reach me? It's Neil Himmelstein, 631-647-4694. And commercial real estate has created a great deal of wealth in this country. And you need to work with experts like Kelly. Give me a call. Thank you, and have a wonderful day, everybody.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.